All right, everyone, welcome to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx, coming to you live from our Dr. Stoxx trading room, which is over on Discord. And if you're interested in joining us, go over to drstoxx.com. That's DRSTOXX. If you can't join us during the trading day, you might click on the subscribe button and see our daily and weekly market letters. But if you can join us during the day, we have a lot of fun hanging out and trading together. You can click on this live trading room and it will take you to a site that will explain everything there. So with all that said, let's go over to charts today, and we're going to look at some of the indexes. I need to get over to my index list. There it is. Before we do any chart work, I want to explain the technical indicators that I have on my chart. I had a request for this. I do this every now and then. And let me tell you what I've got on here. So I don't have all of the technical indicators that I use visible, but I have the main ones that I typically have on here most of the time. You'll see in the background here as an overlay, I've got two versions of the linear regression channel, which has a midline down the middle. It marks off the highs, swing highs of the current trend and the swing lows. And those are set at 1.5 standard deviation, and then again 2.0 standard deviation. And when you put two of those on top of the other, you get this nice pink band down below and a light blue band up on top. Those are the bands that mark out between 1.5 and 2 standard deviation away from the midline, which is here in the middle, two separate colors. And generally speaking, you want to buy down here in the pink zone. And when it gets up to the blue zone, you sell it or you can go short. More precisely, we like to buy in the pink zone in an uptrending LRC and sell short in the blue zone of a downtrending LRC. And if that's the only trading system you have, I think you could probably do pretty well just following those simple signals. Now, on top of that, I also have this colored band right here. It goes green to light green to red, dark red or light red. That is the market bias indicator, and it also indicates whether we are in a bullish or bearish mode for the last 100 period of last 100 days. And right now you can see this is MU Micron technology forming a nice little base off of the recent bounce off the lows. Big gap up on earnings, came down, didn't quite close the earnings gap. You never want to see that, right? If it has an earnings gap that's a revaluation, you don't want to see that gap close. And now we've bounced down here at this landing zone of around 100 three times, down there again today, possibly a good bounce from here. And I'm sorry, I just lost the trail of my thought explaining my indicators, but let me show you a play that we just put on a couple of days ago, actually yesterday. We bought a DDOG with a very similar kind of setup to Micron. Not exactly the same, but we do have a nice tight range after a bounce off the lows with 3 tests of the support line. We bought it down here at 123. Our target is 133. I don't think we quite got there just yet, but it is up there. It's up around 130 right now. Beautiful bounce back, and that's what you can see happen with holds of support and a reversal at that level. And you can see the market bias is itself green, so that gives us the green light to buy down there at support. One of the reasons why we bought it yesterday. Now, what else do I have on here? This is, let me go over to my standard. I have 2 panes, right? One is for the daily chart. The other is typically set at an hour or 2 hour. And I have a different set of parameters on either one, but let me explain. This is my bread and butter chart template here. I've got the 21 exponential moving average on there. That is the light blue line. I've got the 50 period simple moving average, black line, and the thick greenish line is the 200 period moving average. Another reason why we bought DDOG is because it hit the 200 period moving average. It was also pretty close to the linear regression midline, and that typically acts as support. What else do I have on here? Well, I've got the volume bars down below, And if the close is above the open, we get a green bar. If the close is below the open, we get a red bar. Down below the chart at the bottom, I have stochastic set at the default 14 periodicity with a 2 period moving average on top of that as a smoothing indicator. Typically it's at 3, but I like to put it at 2 just to gives me a little more precise measurement there. The green broken line is at 20, which is oversold, and the red broken line at the top is at 80, which is overbought. And that's how we measure. Now, we don't always use the stochastics, and we don't always obey their entry signals. We didn't really get an entry signal on DataDog, but it did really well. But every now and then, we'll kind of take a signal, a buy signal from stochastics as a good swing trade. What else do I have on here? Don't really have much else, with one exception, and I do have let me put market bias on here so you can see that. And I'm going to add one more that might be of interest to you, and this last one is a free indicator that you'll find in TradingView. If you type in the word divergences, you'll find this one. It is a indicator that shows you bearish and bullish divergence per various indicators, and the more indicators you get showing divergence, that is, the price sets a new high, but the indicator set a lower high, and vice versa on the bullish side. The more divergences you see, the more likely it is to reverse and move in the other direction. So you can see another good reason why we bought DataDog yesterday is that there were 2 indicators giving us bullish divergence after a little drop on bearish divergence. Okay. The other indicator that I would show to you gives us these nice green boxes down below, a gray box, a pink to red box up on top. These mark out areas of volume, support down below, resistance up on top, areas where a lot of shares have traded hands, likely to be a place of supply. When price gets up into that area, into that box, it tends to fall down. When price gets down into one of the boxes below, it tends to bounce back up. That's a indicator that is not available on TradingView except by purchase. It's a proprietary indicator, so I'm sorry. You'll have to shell out some money for that one. All right, so those are my primary indicators. I do swap out the stochastics either for MACD or RSI. Those are usually the 2 that I have on there. And over on my hourly chart, this isn't actually at hourly. Let me put it at hourly. Over on my hourly chart, I don't have the 50, 21, and 200 period moving averages. Instead, I have the 34 EMA bands set at high, low, and close. When you set them at high, low, and close, you get 3 bands, different colors, and those bands can act as areas of support and resistance. I prefer to use them more as a trend indicator. So if they're just nicely going up, it's an uptrend. If they're nicely falling down, it's a downtrend. And if they're wavy like this, it's a tight trading range. And that's what we've got with DataDog. Let's take a look at MU. Yeah, pretty much the same thing with MU. Maybe it's a little wider, but it is a trading range nonetheless. And we are down here at the bottom. We've had a couple of little sticks to the upside. So that actually could be, MU could be making a move back higher off of support. It's not quite as strong as the DataDog signal because we're still in a bearish market bias. Yeah, but I like the fact that it is holding today the 50 period moving average. And this is a very well-defined trading range. Now, all the semiconductors are falling today. It's a China problem for the most part, including the stalwart, the leader of the group, NVDA. They've had a good run. Some of them have, I should say, not all of them. In fact, you're going to find a lot of laggards among the big blue chip semiconductors. Qualcomm, AMD, Micron, they're not in that great shape. They really do need to play some catch up, even as the NASDAQ is up at or near all-time highs. A lot of the big semiconductor companies have not been faring that well. All right, that's all. Didn't really want to get into those details. Just wanted to show you what we've got on the chart. Let me clean this up a little bit. I'm going to hide the divergence, and I think I'll hide market bias as well. Okay. So let's take a look. So the S&P 500 started red today. It rallied off of a tag pretty close to yesterday's lows, and we're back up to nearly the high of the day. This is a very good look. It's exactly what I said was going to happen. Now, we still have a lot of week left and a lot of data to come out yet. We had CPI out this morning, and it was just in line, so not too bad. By the way, I forgot to mention the date. Today's the 13th of November. We had CPI out this morning. The year 2024, by the way, if you're watching this 10 years from now. We get PPI tomorrow. We get retail sales on Friday. There are a handful of earnings that are kind of not that important. But we've had a lot of Fed speeches and a lot of input from the Fed. They had their meeting last week. They lowered rates 25 basis points. Market expects them to lower again 25 next month. And we're kind of in a place where inflation is stuck at around 2.5 to 2.6%. Not exactly where the Fed wants it. They want it down at 2%. So, and we've got a new administration because we had the election last week, and Trump is talking about cutting taxes, streamlining the government, all kinds of things that could happen, which means there's some uncertainty in the market. But with all of that, price momentum, forward-looking economic conditions, and a Fed in pause mode, if not in cutting mode, means we've got a lot of tailwinds pushing us forward. And my call last week was that because we'd gone so far so fast on the election, we wouldn't see that much more upside this week. Instead, we would see consolidation. We wouldn't get a pullback. Didn't think we would get a pullback. Of course, we always take what the market gives us. And instead, let's just see some nice, tight little consolidation as valuations catch up to where price has taken us. So that's the S&P 500, right underneath, right at all-time highs, sideways consolidation, tight and choppy. Not a whole lot we can do. It's not a fun trading market because things tend to get trapped, right? If you look at an intraday chart, you're going to see a lot of moves up that get sold and a lot of moves down that get bought. And, the bears get angry, the bulls get angry, and it's not a great market for anybody. But that's actually really good for setting up the next leg higher. Now, we are long the NASDAQ. We went long the MNQ, which is the micro E-mini futures contract, the December contract, and so far so good. I don't know if we hit our target yet. We're certainly right there. What is our target? 20, 20, 21, 21,235. Yeah, what was the high? I'm not sure that's the December contract, though. That might be the November contract. The prices are going to be a little different. Well, it is up at the high, but that could have been pre-market because we'd had a big spike up in the MNQs on the CPI data. Same thing here as the NASDAQ. Now, this is interesting because in my book, you need 5 bars to constitute a flag, bull flag. This is a bull flag, clearly. And we've got a nice looking flagpole right there, quite a tall one. And if we remove that distance and put it at the top of the flag, that would be our next target, which would be 22,400. What does that translate to with a QQQ? Let's see. Here's your move off the lows. Put that on top of the flag. And we're looking at about 545. 545. Is it going to go straight up like that? No, not likely. It's more likely going to get dragged out probably through the first half of December. Now, there are some people in my professional trading group, guys who've been trading for a living for quite some time. And yeah, there's kind of a mix of skill sets in that group. And everybody in the group has their day. We all do. We all get a little streaky, right? And then we get really overconfident, and then we put on too many trades, and then we have a losing streak. But in my pro trader group, there are a handful of guys who are saying December's not going to be that good. Why are they saying that? Well, valuations is part of it. Pricing in some of the inflation that's starting to creep back into the tape. We're at the highest point this year on the inflation. That's not a good place to be. And yeah, I don't know. So earnings, I guess, have been a little bit mixed. Anyway, they have some different reasons why. We're seeing bonds fall through the roof. Just crazy. And I'm going to go out on a limb here and make an educated guess that the reason why bonds are falling is because central banks abroad are not buying our bonds as fervently as they were before, and as China especially. And if that is indeed true, I've been reading about this anyway, if that's indeed true, then that's a little bit of a red flag against the American economy going forward. If people don't want to take on 2, 5, 10 years worth of debt in the American economy, and you're a European country or you're China, you got to kind of wonder what are they seeing? Why aren't they taking on our debt? So we have to be concerned. I really want to see the bonds. Let me take a look at them. Yeah, it was a big gap and crap. It looked good early, right? We opened at a high of the day and well above yesterday's close, and then we just slammed right through all the way back down. Now there is a volume shelf down here, that green box right there. We got down into that box a few days ago, and it shot nicely higher, and we're right back down into the thick of that box once again. I really don't want to see it. I don't want to see us get down below that. What date is that? The 6th of November. And the pivot low right there is 89.55. We don't want to get down there. What was the low today? 89.72. So we're just a smidge above that low, and as long as we can hold that low today, gap and go tomorrow, we've got a really good chance of seeing a bottom in the bonds for at least the near term. But man, it's been tough coming, and I have to admit, I have to assume that this is because nobody likes our bonds, and then we have to wonder, why don't they like our bonds? So QQQ, good, right? Bullish bull flag. The market isn't worried. If the market's not worried, why should we be worried about the American economy over the next 2, 5, 10 years? QQQ looks very good. SPY looks very good for upside. What about the small caps? Well, it was a gap and crap day today. This is not a real good look. So it was huge upside on the election. That's what happened on Wednesday after Tuesday's election. The market was so relieved we didn't get all kinds of bogged down in the courts that we thought might happen. We had a clear winner, and it was the winner that the market wanted, and a winner that should bring us lower taxes and a better macro environment for small businesses, small cap companies. They loved it, absolutely loved it. We're just getting some back and fill right now. We have 2 days of sliding down these red bars. Yesterday was heavy volume, today is light volume. So that maybe we're running to the end of it. What does it look like on the hourly chart? Well, it looks a little nefarious here, I have to say. A little bit kind of toppy, right? A little toppy. Now, the head and shoulders top is a very unreliable pattern. More often than not, they morph into something more like a wedge, a falling wedge. And so if that's the case, there's your falling wedge, which would be bullish if and only if it can break out to the upside. But man, it's got to bounce. We really need a bounce right now in the small caps heading into the rest of the day. And if we don't get it today, we need a gap up and a go and a breakout tomorrow. If we don't get that, it's see you later, alligator, for the small caps. All right. Well, that's TNA. We were long gold. I have a feeling we're stopped out of our gold position there. We kept. I'm sorry. MNQ are raising the stop. I don't think we've had a chance to raise our stop in gold just yet. We might not be out of it yet. Anyway, I'll figure it out when I get back into the room. So gold. Let me show you one thing about gold that I do like. Where did my There's my stochastics. If I head on RSI right here, the relative strength index, at a 14 periodicity, we would see that this is the lowest RSI reading going back to, I think it was whenever this historic run started. I think it was right about in here, June, July of last year. And is that the last year? That's this year. June, July of last year. Where is it? This one right here. That's it. October of 23. We printed a RSI reading. It was way, way down there. I don't know, 17, 18, something like that, which on a 14 periodicity you rarely see. And we haven't seen it until today. We're now at or below that October reading. And that October reading, 23, launched a massive run for gold. Now, gold is, there's so many different factors that impinge on gold. Are central banks buying gold? Is everybody interested in Bitcoin, which is way, way up there, right? Where is Bitcoin? Yeah, way, way up there. We were in Bitcoin from somewhere down here all the way up to 88,000. Here it is at 91,400, and I wish we had held, but I'm really glad that we're not buying here, and I'm afraid that there are a lot of people buying Bitcoin right now, and they're going to be bag holders. Not because Bitcoin's a bad trade. It's not at all. It's just that it's gone too far too fast, and you're going to see some of the other commodities start to catch a decent bid as money comes out of Bitcoin. But it's not going to go very far. So we want to get back in Bitcoin. In fact, I wouldn't mind getting back in and holding it for maybe a year or 2 or 3. We'll put it into our wealth building portfolio, which is where we hold longer term positions. If we can get it down to around 80,000, I'd be really, really interested in getting back in. But let's just keep an eye on it. Bitcoin is one of the reasons why gold has been in the dumps. Everybody's buying Bitcoin, not gold, central banks included. We've had this massive run in the dollar. No, that's not the dollar. Where is the dollar? There it is. Still up again today. Just crazy run. Up, 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 up like a rocket ship. And the same is true for the yields. The 10-year yield is going up, 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 up as bonds are coming down, down, down. Both of those together, not good for gold. So we need to see some of that cool off a little bit. And then we should be okay with gold. Now, SMH is your semiconductor index. And I just said in the room that I like this setup. This is, someone on Twitter asked me, what's my favorite technical setup? It's this one right here. Although I have to say, not quite, because this is kind of coming at the bottom of a pullback. I prefer to see this at the top of a strong up run. And you can see from the LRC that for the last 100 days, we are more or less in a slight downtrend. The shorter term indicators, though, the 21 EMA, the 50 EMA, and the 200, which is your longer term indicator, are all up, all moving higher. So that's good. We've got the stacked MAs. We've got a 4-day pullback in an uptrending market up at all-time highs. We've got a 4-day pullback in the semiconductors on China concerns. And we tagged the support trend line this morning. We bounced a little bit, but this is actually quite a nice setup. Quite a nice setup. It's not giving me what I want down in the stochastics, but that's okay. It's a lagging indicator. It's not moving fast enough for this price. Price is boom, 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 like a heartbeat, up and down, up and down. But I think we have a good chance here of holding this support trend line. It's a very well-established one. We're above the 50. We're below the 21. This is typically a good place for a new launch to break out above 260-something. But not going to happen without NVIDIA, and NVIDIA reports earnings next week, and I have a feeling that it's probably not going to get much traction until we get past that. It's doing what the QQQs are doing, which is forming a nice little bull flag, 4 bars so far, and today, however, it's down when the rest of the market is bounced up quite nicely off of the lows. Some strong sectors. We've got this one, the cloud names. We've got a more broad indicator and a more broad index of software plays. They're doing very well. Cybersecurity, doing very well. So those three, right? We've got names in there like Fortinet and CrowdStrike and Palo Alto and others that we happen to be in CyberArk over in our options letter. We've got some PANW, Palo Alto over in our options letter. So we've also got Panwa in my trend trade letter. We have been in some of those plays in the room, but we tend to have a shorter holding time in the room, so we're out of them now. Not a buy up here, right? One of the problems that with the current setup for cybersecurity plays is that we are getting this potential bearish reversal up in the blue zone. By and large, you don't want to buy the blue zone. You want to buy the pink zone. And your second best place to buy is at the midline. In an uptrending LRC, this is uptrending, but we're up here at the blue zone. It's time for a little bit of cooling off. And you don't want to get into a play, even if it doesn't go down, you don't want to get into a play that just turns around sideways for 2 weeks. You want to get into something that has the potential to move. Biotechs, not so good. And big gap in crap today. I suppose one good potential here is that it is near the 50-period moving average, the 21-period moving average. Volume has been pretty light. But man, there's a lot that could go wrong with biotechs. If biotechs aren't happy, bonds aren't happy, and small caps aren't happy, you know that they're reacting to a perception of the macro market going forward that is going to be tough for growth names, going to be tough for small caps, and tough for biotechs that don't really make money. It's all about forward growth of the pipeline. So some challenges out there in the market, even with the indexes up at all-time high. All right, well, what's keeping the indexes up at all-time high? Let me show you. The MAGs. We used to call these the FANGs, right? It was Facebook, Apple, what was the end? Netflix? Was it Netflix? Or NVIDIA? No, was it Netflix? And G for Google. Those were the four FANGs, and then you kept adding new names, and we finally just called them the MAG 7. For my money, there's more like 15 of them. The biggest blue chip companies on the planet, most of them are tech-oriented, cloud-oriented, AI components. Still solid growth among these guys, but they are behemoths. They are the conglomerates of our day. And if they're not moving, the indexes aren't moving. So we want to always kind of keep a good look on where these are going. You'll see the worst ones today, MU, ARM, AMD, Qualcomm, and NVIDIA's number 6. Those are all semiconductors. So that's the sector that's giving us trouble. Google is down a little bit on some possible litigation. The same is true for Facebook or Meta, though it's holding up pretty well. Tesla is down. I'm not sure it's down for any particular reason. It just had such a great run after the election, and it's got a clear path forward for higher, 450, 500. I wouldn't be too surprised to see those numbers coming in the next quarter. But it just has to cool off a little bit. Let's fill in some gaps. Let's do some back and fill. Let's get the weak hands out of the stock. And then we'll let's see what the hourly chart is looking at. Not too bad, right? We've filled that gap. We've come down into the midline of the LRC, the 34 bands, but not really showing us yet that it's ready to reverse back higher. So we'll keep an eye on Tesla. I like it. Would like to get back in. I just want to see it back a little closer to 300 would be great. Let's take a look at the strong ones. Amazon hit new all-time high today after a nice little 3-bar flag. It's not technically a flag, but it's just a little pause for Amazon. Adobe has been way down, way beaten down. Ugly, ugly chart for a long time, well below the all-time highs. And finally, starting to show us some good, robust, bullish action on very good volume. Let's take a look at the weekly chart here. So by and large, there is a pattern I like to talk about. When you have a downtrending stock, you want to see it form a higher low, and then you want to see it take out the most recent pivot high. And I'm not sure if we're there yet. Here's your sequence of lower lows, lower highs, lower lows. Here's your, well, I don't know, I guess there's your your higher low, and we didn't quite break out. And I'm not sure if this even qualifies. It's just still too much of a mess. Let's clear all that off. The bigger picture is this right here. And as long as it stays within that pattern, it's not going to get very far. But if it can break out to the upside, in fact, I would prefer to see it do something like this. Get all the way down into the apex and then do the breakout, and you would buy it right about there. Or you could buy it down here on a dip into the pink zone. That's, of course, this is a weekly chart, so that's a long ways away from now. Daily chart. Yeah, we do have this higher pivot low right there, and we've got a pretty good, yeah, very good level of resistance there. So 580 is going to be your the thing that will probably give it pause, and here it is at 536. So that's a pretty good move, right? Think of it, divide it by 10, a $53 stock going up to 58. Pretty good move, right? 9% or so. You can leverage that with some calls. You might even do something like the December 600 calls as a little lotto play. They're probably not that expensive. Or if you wanted to leverage the move itself, then you would go something like 540 to January and hold on to those for a while. But it does look to me like it's going to get back up into the 560, 570 before earnings. And all bets are off on earnings. You never know what's going to happen, but that's the move right there. We've got Netflix up at all-time highs. Not a buy here, right? Too strong, too much upside. But and it's not that it can't continue higher. Momentum trades tend to do that, but the probability is very low here. You're looking at not a whole lot of upside compared to what could happen on an overnight disaster. As the market kind of wakes up and realizes, oh, we've gone too far too fast. So just be aware. It's a very good hold. If you bought it down in here, which is where we actually had it for a little while, and then I think I took profits, as I usually do, way too soon. But that's where you want to buy it. And that little consolidation right there, it's a breakout on earnings, which is always good, especially when the earnings gap does not close. This one didn't even come close to closing. Consolidated, buy it inside the consolidation, wait for the breakout move. It's coming soon, and then boom, it's a hold, not a buy. Microsoft been down in the toilet for a long time. Not a good look from the chart. It's also facing some potential litigation, but that's the pattern. That's the big broad pattern. If you can, buy it down here at the supporting trend line, not up here just under the resistance trend line, because more likely than not, it's going to bang against that and fall back down. So it's not a buy right now. It's a hopeful hold for a potential breakout, which may or may not happen. There's no guarantee. But, man, this guy has not been very happy for a while when everything else, blue chip techie stuff, is all up there at new all-time highs. Apple also not a real good look, although it's better than Microsoft. We're forming a high tight base at the top of an uptrend. This is under all-time highs, but not too far. And we just bounced nicely out of the blue zone, out of the pink zone, in a slightly uptrending LRC. All of that stuff is good. It's just that it can't get above the 50. It hasn't been showing robust moves lately. When everything was skyrocketing on the election, this one was not doing that well. So that's a big red flag. CRM, I think, did hit all-time highs today. It was a gap and crap, so this is dead money and maybe even a pullback over the next few sessions, so we'll have to watch that. Facebook, given all the things that it's going through, not too bad. Not very robust on the election because it's not really, this is not a play that's going to benefit from the change in administration. But for a technical setup, I really like this. Uptrending LRC, stacked MAs, nice tight consolidation underneath the resistance trend line, which is up there at 600, nice round number. We might even get long Facebook before the end of the day. That's my favorite pattern right there. You've got the higher lows and a nice clear defined top ceiling right there, and it's starting to coil up just underneath, where's my hand? Starting to coil up just underneath the 600 line, and it's above the 21, which is rising. It's above the 50, which is rising. All of that looks good. Technically looks really good. There are some headwinds, however, and it may not get going that fast. One more look is Avgo. Kind of a similar, I don't know why I have all that stuff on there. That's from the past. Similar sort of pattern here. Your ceiling is up here at 184. Very clearly defined. Can you see that? Very clearly defined. And then, I don't know where I guess that would be your supporting trend line. So that's your pattern right there. We came down to the 50-period moving average today. We're printing a doji. It is below water, but it is in the semiconductor space, which has not been doing very well for days now, 4 days in a row. And this, however, this one, in addition to NVIDIA, looks pretty good. This one looks pretty good for a move back up higher, a break of 184, and then new all-time highs. All right, guys, I am done with what I wanted to talk about, so I'm going to jump over to, and I'm going to film this as well. I'm going to jump over to the room and see what you're interested in. If you guys want to start typing in ticker symbols, MSTR. All right, well, this one is a Bitcoin play, and this is interesting, right? Because Bitcoin is up today, although it's well off the highs, coming back in as we speak. And this is printing a big bearish reversal candle. So this is not a buy. It's not a buy. Of course, it can reverse back up again, and candlestick patterns aren't quite the indicator or the signal that they used to be. But man, that looks like a big break has been put on the stock. And if Bitcoin is up, but this is a pure play on Bitcoin is down, MicroStrategy is down, then there's a problem there. It just went too far too fast. So everybody wants to get on board some Bitcoin. They want their little chunk. We had ended up putting a big chunk of it in the bank. We got most of the meat of the move, which was really nice. Now it's where, you don't want to jump in and try to pick up the scraps. Don't pick up the scraps after a really good run. Let it cool off. Let it come back down to support. Wait until you get a better technical setup. This is a horrible technical setup. Now, how far is it going to come down? Well, we don't know, of course, but it does have some gap support around 298. So a dip below 300 probably should be bought. If we get over to the hourly chart, we're going to see something a little more orderly, right? A nice little pullback with oversold stochastics. Very good volume, of course, on the way up. This could only come back down to about 325. The middle of the bands, not even anywhere near the 300 gap. And if it comes back down to like 325, 327, and starts to give us some green bars with good volume, I would say then you could buy it. But not right now, not today, not at the end of the trading day today with that big bearish bar on there. Now, this is not a short either, so don't short this thing unless you're an expert. We short momentum stocks all the time in my momentum letter, and we're up, I don't know, we're having the best year ever shorting momentum stocks in an uptrending bull market with momentum stocks at the all-time high, technical stocks at the all-time high. So I don't know why my system is working so well, but it has been. We're up over 2,000% year to date shorting momentum stocks. Crazy, crazy return. All right, so that's MicroStrategy. Let me see what else you're interested in. Well, we looked at SMH. SMH looks better than Stoxx. This is a 3x leveraged fund. It's going to be over-exaggerated. SMH, however, as I said, is giving us a bullish, potentially bullish setup. Don't think it's a buy today, but we'll take a look at it tomorrow. Manhattan Associates. I know the ticker symbol, but I don't know much about the company. So you had a big gap down on earnings. That's never good, right? It's a revaluation. The market is saying, no, you're not a $308 stock. You're a $276 stock. And it didn't close that gap for quite a while. Then there was a big gap up, and I have no idea why. So maybe an upgrade, maybe some good news of some kind. And what it's doing now is it's closing that earnings gap. So it's actually telling the market, hey, you got it wrong. We now know something about the company that makes it look a lot more attractive. So it's a bit of a choppy chart. I don't like gaps that big. They tend to act as resistance. So you might get stuck, as it did this morning, right? It already got stuck there at about 292. But the fact that it is closing the gap, everything is uptrending, and it's rejecting those earnings lows are all good and bullish signs. So if I'm in it already, if I bought down here especially, I would be holding it. I would maybe be trimming a little bit and moving up my stop, but it's not a buy right here. There's just too much that can go wrong with that. Well, we looked at Tesla. We're in pullback mode right now. Back and fill, discounting, shake out the weak hands, discount some potential bad news, and that's all that it's doing. I suspect a couple of more days of softness, and then maybe Friday afternoon we get a nice rally back up. Monday morning, Momentum Monday, we get a nice rally back up. Tesla is one you want to be in longer term over the next 4 years. Tesla, Bitcoin, I'm assuming small caps, but they're not showing it today. But those are the spaces, and semiconductors, of course, too, and anything related to AI and data storage and electricity plays, utility plays. Those are going to be the sectors over the next 4 years that we should be focusing on. I would throw banks and home builders in there as well, because rates should be coming down. Loans going out the door soon. So those are also plays we can focus on. And Tesla is one of those. So, but it's just not a very good entry right here after that big ramp up and then two big drops. Yeah, Steel City's asking about hedges, and I don't think this is just not giving us a hedge, right? It's not showing us that it's in pullback mode. It's just sideways consolidation. I think hedges for the next couple of days are probably going to give us more of a headwind than a tailwind. So I'm not inclined to put them on just yet, but I've got my eyes open, right? I am watching, because you usually don't hit the blue zone of the LRC and not pull back for at least a week or two. Going sideways is as bullish as it can get, and is the economy supporting that? I don't know. But we'll see. It's one day at a time. NVIDIA we looked at real quickly. It's got that nice little bull flag. It's, of course, got earnings next week, so probably not going to get too much traction to the upside ahead of earnings. A little too much fear there, and the whole sector has not been happy. So I don't quite know what to think about NVIDIA, but this is not a buy. It's potentially a hold if you're already long and you've got some profits. I would be trimming some of those profits off and raising up my stop. We'll look at Riven, and then we'll call it a day. So it's interesting. Lucid, which is in the same space, not doing very well today, but it's been getting, or is it Riven? Maybe it is Riven. One of those guys, one of these EV makers that hasn't been in favor at all, and probably won't be in much favor in the new administration, because I don't think they're all that keen on lots of tax breaks for EV car buyers. Those might start to scale out a little bit. But with that said, hedge funds and other fund managers are buying. I'm going to have to say it's Rivian, because Lucid doesn't look like it's getting much traction. This one is today. It's got some news out. It's way up on huge volume. It's up against the 200 period moving average. Everything is falling down. It could be a one-shot wonder, a one-hit wonder. You got to know, why is it up today? What's the news? And if it's something that has longer-term consequences, then that would be a good thing. It may very well be, however, that funds who are buying it last couple of days knew this was coming out, and today they're selling, which is probably why it got up to 13 and now it's back to 12. So the funds did the old bait and switch, right? They bought a whole bunch of shares. They announced, hey, I'm buying Rivian, because they knew the news was going to come out, and everybody piled on board as well. The stock shot way up, and then they started selling. It happens. Unfortunately, it happens all the time. I know some of those guys, not personally, they're not friends, but I've heard them talking, and that's just the kind of thing they do. And if you ever want to learn more about the insights of that, read Jim Cramer's book on the time when he was a fund manager. He'll spell it out. I'm sure much of what he did was illegal, but it maybe wasn't back in his day. So PLTR, funds have been buying this as well last couple of quarters. It is a great play on AI. It's got exposure to the defense industry, which is likely going to get some stimulus from the government now. Trump wants to strengthen the military. However, this is a hold, not a buy, and in fact, if I were already long, I would be out today, because that's a nasty-looking reversal bar. When it gets up to new all-time highs and then gets slammed back down to the lows of the day, the market is saying, enough is enough. And very rarely will it get back up above that pivot high without 2, 3, 4 weeks of some downside, some consolidation, some choppy trading. That's just how the market works, right? It's a seesaw, up and down, up and down. And it's not just as simple as buying it when it's down and selling it when it's up, because you could really go broke trying to do that. But there are some very simple rules, and this is one of them. When the market rejects a higher high and slams it back down to the lows of the day, that's typically a time either to get out or to avoid it, or to move up your stops and hope for the best. It's a great company, though, however, and this is one of the ones we should add to our list of companies you should be in over the next 4 years, right? Tesla, PLTR, and all the other sectors that I mentioned, Bitcoin plays. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'm going to send this over to the YouTube channel, and then I'll post a link in the room, and we'll trade the rest of the day. We've got about an hour left. God bless. Bye for now.